Hey everyone, Larry Walsh here at Channelnomics. When companies come to us asking who does partnerships well, who has a good channel program strategies and program designs, invariably we point back to Cisco. The Cisco has been the gold standard in channel programs for the better part of the last 30 years. I mean, they've honed it into a well-oiled machine, if I'm not mixing metaphors there. It's truly remarkable. Not only does Cisco do channels well and partnerships well, but they really take a lot of consideration and time in crafting their programs and crafting their strategies, and no more than that. Then they also take a lot of time to allow partners the space to adjust. In 2024, Cisco announced that it was relaunching its channel program. It was introducing a new strategy, a new framework called Cisco 360. And it is a big departure from the existing program. And there's a lot of changes to reorient the program around partner contributions and partner value and partner capabilities, about how partners can sell across the portfolio, but most of all, how partners can deliver a superior experience. And Cisco announced it back then in the fall of 24 with the intent of not launching until now. And they did that because they wanted not just to give partners time to change, but also involve the partners to a co-development process. And the partners had a big voice in how Cisco 360 came together. So we've invited Elisabeth De Dobbeleer, the Senior Vice President of Cisco's Partner Program, to join us here to talk about all the things that happened in the development and in the refinement and ultimately in the rollout of Cisco 360. This is Changing Channels. I'm Larry Walsh. Let's get into it. Elisabeth, thanks for joining us here in Changing Channels.
Well, thank you very much for having me, Larry. Happy to be here.
Well, you're coming up on a really auspicious date. You're launching Cisco 360. It's been more than a year in the making. Before we get into it, though, because I've watched Cisco do this a number of times over the, dare I say, the last couple of decades. You telegraph a change well in advance, and then you come up to it, and all of a sudden it's here. But I am curious to start off, before we get into what Cisco 360 is. Why now? What was the inspiration or the imperative that happened back in the end of 24 that led to this moment of you launching this new program in 2026?
Well, thank you very much. Yeah, why now is an excellent question. First of all, I myself, I've spent 25 years at Cisco, so I've been through a lot of these shifts and changes myself as well. And we've always been very partner-centric since we declared in 94, I think, that we were going to do all business first through and with our partners, right? And today that's more than 90%. So the why now is multiple reasons. I think the first and ultimately the most important reason is customers and the market, right? Customers are asking for much more engagement beyond the transaction, right? The whole piece around staying with our customers along the journey and making sure we keep contributing value, and our partners are able to do that. So that's the first and the last reason, if you want. And then linked to that, of course, the impact of AI, and maybe the impact of AI also is one of the reasons on the how, right? But we can talk about that later. But everything is going only faster. And so our customers really need help with being able to deliver outcomes. And very often we see also we need multiple partners to be able to deliver the outcome. So there's a lot happening in the market. And so that's a big why now. We see other vendors and our peers and competitors moving in very similar directions. The shift from transaction only to along the life cycle, the shift to much more managed services. Of course, making sure the incentives are following where we want, or driving where we want the behavior to be, and all of that. I would say another reason was also very much addressing the eternal monster, if you want, which is complexity, right? A desire to, if you would start all over again, what would you do? And that was definitely one of the design principles, because of course we haven't been standing still, and our partner program has been adjusted and tweaked over a matter of 20 plus years, which probably also resulted in a quite a complex program. And so we also had a big desire of simplifying.
Fantastic. I'll never forget. I was at a Cisco event, and this is literally like 20 years ago in San Diego, and they were announcing a program change, and they said, and it will happen in 24 months. And I'm sitting there going, wait, 24 months? We have to wait that long? It's amazing that Cisco does that much of a grace period. They let partners adjust to the change. Something that other vendors don't do very often or very well. Um, but what is the impact, or what do you anticipate the impact on the partners being through the changes of 360?
The impact, ultimately, what we're after is durable, profitable, predictable growth, right? That's ultimately why we're doing all of this. So we are shifting the incentives, we are shifting the logic itself on how you define and reward partner value. We are redefining what it means to be a capable partner in the era of AI, etc. But we took the 15 months very deliberately. We said when we announced it at Partner Summit 24, we said we will give you time. We will protect your investment as we're preparing for this. So we basically extended all the gold and all the specializations to ensure that partners could just focus on getting ready. And we talked about not leaving any partners behind. So we said we want to do it together, which was both the co-design, but also a very sincere intent to make sure that partners had time to maximize their position and be set up for success in the new program. But yeah, time flies also, right? So
Yeah.
it's on
So,
little time left now
uh,
for launch.
all right. So we've danced around it for a couple of minutes here. So let's talk a bit about 360. What's the change? What's the 3 or 4 tent poles in it that's going to be make it different than what you have today?
I think the biggest change is, and it comes from the fact that we're anchoring and focusing on customer value, is that we're redefining the partner value. And we're doing that along these, what we call the value index, which is along these 4 categories. It starts with foundational, which is rewarding investment in customer success practice, right? So back to my point around lifecycle selling, managed services practice maturity. So that's the first basic thing, foundational. Then from there, it's all about investing in technical capability. So I would argue that that's always been core to Cisco's partner program, but we very much re-energized, especially again, given the pace of innovation and also the ability or the lack thereof of keeping up, right? That's a very hot topic for our partners also. How do you keep up with the skilling and reskilling and upskilling? And so being a capable partner in a portfolio is then the next big pillar. And then from there, we talk about engagement. And the word engagement is a very deliberate word. I could have used lifecycle as well, but engagement is broader than lifecycle. It's also what happens before the sale, right? So the pre-sales, the consulting, the influencing as well counts as well. And then of course, after that, land, adopt, expand, renew. And ultimately it's about performance. So there is an element of growth, TCV and ACV growth inside the way we calculate partner value. So that partner value index goes along foundational capabilities, performance, and engagement. So that's a big, big difference.
Yeah, and you're not the first. Cisco's not the first company to do this. I mean, and you're still, I would say, on the leading edge of vendors that are trying to shape their program in this way around partner capabilities, but also to you use the word enable. I'll use the word empower
Yeah.
to not just service the customers the way that they need to be, but also to engage with them across your portfolio. And Cisco has a very broad and diverse portfolio. So implementing a program like this does come with trade-offs. What was it that you looked at and said, okay, these are the things that we have to do, and these are the trade-offs we're willing to make?
Yeah, that's a great question because, of course, By definition, first of all, the 360 was a very deliberate choice. It's basically hinting at the fact that it's accommodating and designing in for all possible partner business models and ways of contributing value. At the same time, then, if you talk about trade-offs, at some point partners were saying, oh, this is just for big partners. And then other partners were saying, oh, this is just for small partners. So is it for only for big partners, only for small partners? No, it's for all partners driving value, right? That's ultimately the philosophical principle behind it. But of course, in reality, when you're designing and going into the nitty gritty detail, you have to do trade-offs. So for example, that's why I was so deliberate about going into co-design. We made it came with, as I called it, controlled chaos for a while, because we were releasing lots of things, and some partners thought it was fantastic because they had lots of chances to provide feedback. And some partners said, oh my God, this is too much chaos. Just give it to me and I just want to know what it is and then I'll go and implement it. But we were very deliberate about getting as much feedback as possible from the smallest reseller to the MSPs to the biggest SI, so that we could design in as much as we could upfront. And so we've been adjusting and actioning feedback all along the way. And I think right now we have a pretty good balance of trade-offs, precisely because of the co-design and the feedback.
So you mentioned this a couple of times already about the complexity. And this
Yeah.
is something that a lot of vendors, and particularly vendors that we work with here at Channelnomics, talk about, is complexity is the enemy of productivity. And
Mhm.
one of the things that we've also noted, and for those of you who are interested, you can find this on our website. We have research on ease of doing business and the impact it has, is that there's ease of doing business has a greater influence on partner productivity than almost anything else, even more so than incentives and profitability. How did you tackle that? I mean, when you call it a monster, I mean, it really is a monster, and it's one that is actually more natural for a company like Cisco to embrace complexity than it is to wring it out. So, talk a little bit more about how you did address it.
Yeah, a couple of points. I think, first of all, for the last few years, the top complaint or the biggest issue has always been it's too complex, right? So we've always known that it was a top item to address as and when we would embark on this journey to simplify. Now, we will never become simple. I would be lying here or be very naive for both, right? If I said that we are becoming simple, but for sure we wanted to simplify radically and become much more simple while still be comprehensive, because of course the portfolio is very large and broad, and we will always have partners that are selling across the portfolio and then partners that are selling only one specific portfolio. I think there are two areas where we radically simplified. Number one is the experience, the digital experience. And I think with the impact of AI, there is endless opportunities with that, right? Because you can have a very simple program, but if the experience is complex, it's still a complex or a horrible program. So it's all about making sure that the way partners get access to the data, the way partners understand how to use the program and then use the program, that will very much impact the way they perceive how easy or difficult it is to use. So um, this whole program change is not just a program logic change, but it's a huge investment in digital capability as well. For us, it's called PXP, the Partner Experience Platform.
Mhm.
And we've very much simplified that platform to make sure that it's at the fingertips of the partners, let's say, to understand where they're positioned, where they can find the metrics and the scores. If they want to change the scores, what does it mean? We've implemented AI capabilities in September, and we will continue to work on that. So it's a agile development type of approach, again, all based on co-design. So that's one big topic, I think. And my personal opinion is that digital experience is going to be a differentiated asset for many years to come, also because of AI, right?
Mhm.
Especially if you talk about, big vendors like Cisco, let's say, the only way to make it simpler and easier will be to invest in digital capability. Um, the other piece is the logic itself. So on the incentives, for example, we've consolidated 24 incentives into one, which we then call the Cisco Partner Incentive, where we're able to reward landing, adopting, expanding, and renewing hardware, software, and services all along one single integrated framework. Whereas before, and again, for historical reasons, and we all understand why, we start, and maybe that's the innovation you're talking about. More than 20 years ago, we announced VIP, which is a very known program, a backend rebate on
Yeah.
landing product. Then we added a version for software. Then we added a version on services, which was a very complex program. And then we added Adopt as well. But they were all different pockets and different incentives. So if you would start all over again, which we kind of did, then you would never build them all in different components, but you would make it one integrated framework. So that's another one area where this another
Yeah,
piece.
I did want to touch on that because I do find it interesting the way that you are creating that as one fluid motion. But you're right. Cisco it was a pioneer in what a lot of companies now would refer to as a value incentive or a growth incentive,
Yeah.
right? And a lot of your partners have built their Cisco profitability based on that. So how do you manage the change? Because it's not just a reorientation of, okay, we're going to enable you to do this. We're going to help segment you based on your capabilities here, but we're also changing your profitability stack.
Yeah, absolutely. And some of that has been in the making for years to some degree, right? So we had
Mhm.
already over the last years shifted incentives to lifecycle selling, to adopt, etc. But this is another bigger step right now. I always say the same. I think if from these 24 plus incentives into that one integrated incentive, the one thing that is changing the least is precisely that 20-year-old VIP value incentive logic. So this idea that as and when you're landing product, you get a rebate, which is fixed and predictable. That still very much stands in the new program as well. And especially in today's environment where hardware is cool again, let's say that's really, really important. And uh, we are heading into a big refresh cycle as well. So landing hardware is still benefiting from that predictable rebates. So that's baked into the new framework as well. The biggest change is around services.
Mm.
Where we had a very complex attach and renew logic with delivery and sales rebates, etc. And that's moving to VIP-like logic where you land services, you get paid a rebate. You grow services, you get paid a rebate as well. And then finally, the adopt piece, where we want to increase rewarding partners on that. But that's a very big journey as well, because as much as we started doing that, it was relatively non-material, let's say, up until a year or two ago. So we're shifting more and more money into that, but we're doing it together because as we are expanding our own customer success motions and shifting our resource and training our own sellers, we are doing it hand in hand with the partners.
Yeah.
Um, yeah,
So, one of the things that comes to mind, and you mentioned this, is that you had some partners that viewed the change as saying it only favors the big ones. You have some that say, well, no, this is going to favor some smaller ones. And let's just be candid about this. Cisco is a very big vendor. It
yeah.
has a very big footprint on the market, both in terms of its span in the global IT market, but also in terms of its portfolio. You have networking, you have endpoint management, you have security. There's a number of things within your
Mhm.
portfolio that really do cross a lot of categories. And we've seen this with some other programs that have gone through the transformation you have, where it really does. It's the expectations are really high in terms of who you value to be good. And it does tend to favor larger partners. So how do you balance that out? How do you tell because you have a diverse community of partners as well. How do you tell them that there's an opportunity for everybody here?
Yeah, I think that that's one thing where I would say in our co-design process, we realized that what sounds great on a PowerPoint may not work in practice. So in the first few months, so now I'm talking December 24, we started releasing value index and we started with security and we had consistent metrics, one size fits all across the board. And very quickly we learned exactly what you said, that some of it didn't make any sense. I mean, you can't ignore different partner sizes and different company sizes, and that you can't just have a one size fits all. So one of the biggest things we did as a result of partner feedback in June then 25, I'm now saying, is to adjust what we call t-shirt sizing. So in function of the amount of business you book, you get assigned a certain t-shirt size, and based on that, that then defines the requirements you need to adhere to in terms of, for example, investing in capabilities. And that immediately course corrected that balance of making sure it suited everyone, both the large integrator that typically sells across our portfolio, all the portfolios, and wants to do that and wants to position itself like that, versus the smaller, let's say, niche security player who only wants to sell security and wouldn't be in that league. So yes, that's one of the examples.
Yeah. One of the things that you keep referencing, and I want to just touch on this a little bit more because I find it interesting, this co-development idea. And I've over the years, I've been involved in the design of several channel programs, large and small. Sometimes they're done, through a collaborative process of testing and saying what the partners think or modeling to see what would happen, or it's just purely done from the inside out. This is what we want and we're going to do it. Um, but what you're describing is almost like a crowdsourcing.
Yeah.
How did you do that without setting false expectations or telegraphing too much change too early that would then disrupt the existing partner relationships and their go to markets with you? What was it like to go through that process?
Well, I guess one answer would be that, of course, my perspective is based on where we are right now. I think you should ask me this again, maybe a year from now to see, but I think, first of all, it's very close to the way I like to work in general. I do it internally as well. I always think that the wisdom of the crowd is just such an untapped treasure. And I also thought that in today's environment where pace of change is going faster every day, right? And the impact of AI and all these things, that we would be very arrogant and pretentious to think that we would get it all right if without asking partner input, right? So I think one way to do is to say we're going to take time. So the 15 months were really necessary, because if you want to go into this quite vulnerable process and say, okay, this is what we're thinking of, we're actually releasing it, and we're not releasing it to 20 favorite partners, we're releasing it to everyone, and we are allowing everyone to, which we truly did, of course. There was in-person feedback and big meetings feedback, but there was lots of digital feedback as well. We've done it across the board. Um, we needed time to release, to get the feedback, and to action the feedback. And that process, of course, took a bit of time. Let's say if we released in December, we got all the feedback December, January, we could respond to the feedback in March, April. So it did take some time, slower than I would have liked, but I was very adamant that this was the only way we wanted to do it, to make sure that we had agile development and we were course correcting as much as possible, as many bugs as possible before launch. What I absolutely didn't want to happen is that we would say, ta-da, here's a new program. 3 months later it launches, and then you have all this partner feedback, and then you have to change half of it. I was adamant that was not going to happen. So here, a lot of the issues or the things that partners thought were wrong or needed correction or tweaking, we've
Mhm.
already done that over the last few months.
All right. So it's February 2026 and Cisco 360 is going live and took 15.
January 20.
Yeah.
Yeah.
Yeah. Yeah. So, but it took 15 months to get here.
Yeah.
So you and I get together 15 months from now.
Perfect.
Well, how are you going to define that it was, what are you going to say was, would mark the success of it all?
Ultimately, it's about growth. So it's all about contribution to growth, right? That's clear. And I think the next one is capabilities. Have we been able to grow more capable partners, whether across the portfolios or in specific portfolios? I think that would be my second one. And the third one was have I truly brought the 360 promise to life? Meaning, have we been able to design in not just for resellers, not just for MSPs, but also for influencers, for consultants, and for all the multiple ways that partners are contributing value? Because again, today we have programs that are accommodating that, but they're not really very extensive. And so we want to double down on all types of partners and business models.
Very good. Elisabeth, thank you so much for joining us. We wish you the best of luck in launching Cisco 360.
Yeah, thank you. And I look forward to talking about it a year from now as well.
Terrific. Well, that's about all the time we have for this edition of Changing Channels. Again, I want to thank our guest, Elisabeth De Dobbeleer, the Senior Vice President of Cisco's Partner Program, for joining us here to talk about the new Cisco 360 program. And as always, I want to thank all of you for joining us as well. Changing Channels is about sharing experiences and exchanging knowledge. And most of all, it's about helping to make the channel better for everyone. If you like what we're doing here, Changing Channels, please hit like, hit subscribe, tell your friends. Also, check out our other podcasts, In the Margins and The Network Effect, and check out all the research and best practices and the services we offer at Channelnomics over at channelnomics.com. Until next time, I'm Larry Walsh.